I'm Ian Carr, the founder of Fintech Today, a research publication focused on the fintech industry. And Henrique is the co-founder and co-CEO of Brex, a credit card startup focused on small businesses. Thanks for joining us today.
Thanks for having me. Super excited to be here.
So yeah, let's dive right in. I mean, a lot of stuff has been going on with you guys. I think, by serving small startups and small businesses, in my opinion, you're really uniquely positioned to understand the issues that SMBs are facing with COVID. So would love to hear a little bit about, some trends that you're seeing and what you guys have been noticing in the space.
Yeah, for sure. So today we serve mainly, I would say, three sectors, which is startups, e-commerce, and life sciences. So um, it's hard for me to speak in behalf of all SMB. There's a lot of different types of SMBs out there, but I can speak behalf on these three categories. Um, Starting with startups and life sciences, it's a sector that's quite lucky to, mostly have a lot of venture backing. And one interesting stats is that even though on public reporting through Crunchbase and others, investments are down like 35% compared to, Q2 last year. Here at Brex, we see a lot of the data because of our connection to the bank accounts. And at least in our portfolio, it's only down like 8 to 9%. There's just a lot of unannounced rounds and bridge rounds of companies raising less money. So I think startups are being able to handle this crisis quite well, because of the venture capital community is still quite active.
Yeah.
And e-commerce is a little bit different. E-commerce, they not necessarily have venture backing in their sector. It was a little bit more disturbed, more dependent on the consumption levels of the country. And we've seen some of that have had a lot of trouble, especially in the earlier months, because when China was constrained, a lot of people depended on delivering products from China, right? So they could sell, and that was pretty bad. And now it's getting back up, but there's actually a lot of e-commerce that are growing more in this phase because everyone's buying stuff online, right? So
Right.
a lot of them are growing, and there's a lot of people going online. We've been having a lot of interest in people signing up, saying, "Hey, like I was only selling in the physical world, and now like I want to move to the online world." And we've seen a lot of that as well.
How are you solving that problem? I mean, are you thinking about partnerships? Is that something you're thinking about, working on yourselves? Really interesting problem for a lot of brick and mortar companies thinking about, with shelter in place orders and stuff, trying to move online.
Yeah, today we get them mostly when they're already kind of making their move. I think Brex is known for being, a financial service company for these new generation of businesses, right? So businesses that are trying to adapt to this new world. So a lot of companies, when they went remote, they signed up for Brex because, now it's easier to send the virtual cards for people and kind of get it that easy. Or when they're moving to e-commerce because we have a good e-commerce product. So we get them mostly when they're already kind of, done or interested in doing that transition.
Yeah, you mentioned startups and raising some bridge rounds, some unannounced venture rounds. You guys raised a round relatively recently. Would love to hear a little bit about that process. I mean, raising during COVID doesn't sound like a fun experience. So would love to hear how that went with you guys.
Yeah, so I think we were lucky to already have relationships with a lot of investors that were trying to kind of find a way of working with Brex for a while. And I think that when COVID came, we're like, okay, I think the most sane thing for us to do is, increase our balance sheet and so we can support all the companies during these tougher times, right? So because if we had our balance sheet be, if we weren't comfortable with our balance sheet, we would have to be a lot more aggressive with our customers. And, and we decided to increase our balance sheet, take a little bit more dilution, but try to be more support better our companies.
Gotcha. Yeah, it makes a ton of sense. Yeah, speaking of supporting companies, I think you guys have been finding a lot of really creative ways to add value for your clients during COVID. And I think one of the really interesting things that I've seen is the shifting of the reward structures and kind of incentivizing different kind of purchases. Talk a little bit about the motivation behind that change and how you guys have kind of thought about how leveraging what you guys have and kind of repurposing it to with the changing times.
Again, Brex, we're here to serve these next generation of businesses. And the thing about the next generation of businesses is that they want different reward structures, right? They want everything different, right? So, if, for example, you're now operating as a remote company, you don't need any travel points, right? That's not
Right.
what you're doing at all.
Yeah.
And some of them will actually stay remote uh, after this COVID passes, right? And they still won't need travel. So if we want to serve, the next generation of businesses, we need to adapt to their new needs and, being remote. So we adapt our rewards to the remote world as well.
Yeah. So, talking, I think you guys, do you have any specific details on like some of the reward changes that you've made? And I think it also talks a little bit about, the fact that you guys, kind of build your technology in-house and you guys can act more nimbly too, right?
Exactly. So, for example, in other banks, creating a new rewards program is a big problem. It's like a
Right.
whole new card that you have to create that has a different thing. And the other thing is because we recreated our platform from scratch, it's easy for us to say, hey, rewards and remote collaboration tools. That's not a category that exists in a bank when they go build it. So for us, it's quite easy. We just listed, oh, what are the merchants that are in this? And, and hey, you get points on this. So the fact that we have a nimble platform allowed us to adjust so easily. And that has been pretty successful for us. And I think that is just one of the things that that change in behavior is the rewards. But another behavior shift that we saw is a lot more companies are issuing like virtual cards to employees,
Right.
so they can actually buy things online. And I think before they just like oh yeah, just use my card, gave them a card, and
Mhm.
people do it now. A lot more structures coming and issuing a lot more virtual cards, for example.
Yeah, and I think let's dive a little bit deeper into the concept around building your own technology. I think a lot of fintech companies have kind of been able to spin up because they've been leveraging other infrastructure companies and things like that. But you guys have built a lot in house. So, what was the motivation around that from the beginning, and how do you kind of think that plays out in the long term?
Yeah. The motivation is we truly believe that what hampers innovation in financial services is core banking and core processing. And there's so much more that the world is doing, and that it's really hard to do that integrated with the core banking, core processing. So since the beginning, Brex, we started on Marqeta, and we couldn't have had
Mm.
started so easily if Marqeta wasn't there, right? Because it was just so simple to get customers and get product market fit. But I think since the beginning, we always knew we wanted to own our own technology. So for Brex Cash, we built entirely from scratch, and for Brex Card
Yeah.
now, we're 100% from scratch, and that allows us to build simple features that other banks can. So I'll give you an example. When you log into Brex, you can see, instead of seeing Uber asterisk 4266 ride or something,
Yeah.
you just see Uber. It's like simple plain. Seems like a very
Mhm.
simple feature, but hard to do if you don't control your own stack.
Right.
So there's a lot of things like that that allows us to change that. And we believe it will be more and more in the future, because the reality is that it's much harder to build a system that serves everyone than a system that serves just yourself.
Hmm. Yeah, and I think that Uber, that merchant like code example is a great example, right? Because the codes are so messy inside of a bank, it makes it data analysis much more difficult. Where for you guys, because the data is a lot more clean, I think you can do a lot more interesting things around that, right?
Exactly.
Yeah. So let's talk a little bit about, just like being a lending business right now. I think, underwriting and risk management is always paramount if you're in the lending, in lending at all. How have you been kind of thinking about your underwriting standards with everything going on with COVID? And, I'd love to kind of hear your perspective around like where you kind of think things are headed a little bit too.
Everyone says that your underwriting models are never proved out until you hit a crisis, right?
Mhm.
And I think was it for Brex. We really had a downturn, and we're seeing what happened. And the reality is that a lot of our thesis proved right. So the businesses that did go under, Obviously our losses have increased. Not having a personal guarantee was extremely important for them. Because imagine,
Mhm.
during this crisis, your business is going under and you're liable personally for like a ton of money, like it
Yeah,
sucks.
yeah.
And I think that a
And
lot of
it has a long-term effect on your financial life too, right? If you're like,
exactly.
yeah, if you want to like start another company down the line, it makes it a little bit more difficult too.
Exactly. So for those who, couldn't survive and the business couldn't get through it, I think not having a personal guarantee was super important. Customers were really happy that they didn't have to carry this burden for the rest of their lives. And then there was the businesses that, had a little bit.
Ooh, I think we froze again. Sorry about that, everyone. Enrique, can you hear me?
Did I stop?
Yeah, I think you were talking about like just businesses that were having some that were going under, and the personal guarantees.
Yeah. But so the next thing I was saying is that there are the businesses that, you know, could survive and did go through. And those were also the underwriting model helped a lot because, we kind of adapted our exposure as going through the crisis, but also supported them in a way that they could get through it. And, again, luckily, a lot of our customers are e-commerce, so they kind of could get back up and running pretty quickly. But are now all the banks that serve Brex, right, and then give us money to lend, are a lot more confident in our ability to survive a recession. So we
Mhm.
actually established a lot of credibility with them, which will allow us to even expand our credit lines and grow volume and everything like that.
And it probably gives you a really interesting data set around which of your customers, around the risk models and things like that, about what happens during a potential downturn. Which customers do you think are more susceptible, in theory, more susceptible to going under and things like that, right?
Yeah, exactly.
Do you see? You said losses have been ticking up a little bit. Do you see it sort of going up for the rest of the year? Or do you see it sort of stabilizing as things kind of get back to relative normal and
They're already stabilizing.
Okay, gotcha. Yeah, so then let's talk about compliance. I was a double major in econ and political science, so I love the compliance side of things, and I've always been really interested to hear about how you guys manage the product compliance side of things, and I'd love to hear a little bit more about your perspective about just overall how you think about compliance at Brex, and then and maybe any specific examples that you guys have been able to do something unique on.
Yeah, totally. So the thing about compliance for us is that we believe that compliance is an opportunity, not a problem. So I think a lot of tech founders, they're like, oh, there's this compliance thing, shit, why is
Yeah.
this bad? And and what happened is, so Pedro and I were actually our first business in Brazil. We started, we were directly regulated by the Central Bank of Brazil.
Hmm.
So since the beginning, and the central bank was kind of launching this new uh, kind of regulation would actually be really good for the new entrants. So we always said, oh, great, like there's regulation. Now we're going to be able to do our stuff because there was a duopoly in Brazil that prevented us from doing a lot of stuff. So we
Right.
always kind of saw compliance as an opportunity and a way to create innovation.
Mhm.
Because, in the Brex first Series A deck, I remember there was this thing in which like building great financial technology products is a mix of engineering, finance, and compliance. And having one person, Pedro and I, that understood very deeply all three parts is what allows you to create these really good products.
Yeah, and the intersection of the three, I think, is really key too, right? I think
Exactly.
you touch on that.
So I
Um,
personally, just last point on that, I personally, when we were starting Brex, read hundreds of pages of FDIC manuals to understand exactly what we could and we couldn't do, what our partners could and couldn't do. So
mhm.
when we went, for example, to talk to our bank partner, every time he said like, "Hey, there's this compliance thing," we already had an answer. We already know exactly what we're gonna do and like how we're gonna solve that problem.
Yeah, so for entrepreneurs looking in the fintech space, I mean, so it seems like your advice is around, getting ahead of the compliance rather than, kind of being, kind of thinking about it as an afterthought, right?
Yeah, exactly. I think it needs to be part of your product development cycle.
Do you think it makes sense to think about, obviously with small business lending and credit cards, like there's a ton of compliance, like, and especially as you move more further along, like do you think it makes sense for entrepreneurs who are getting started to kind of think about this from like from like day one, or do you think it's something that you craft over time?
Day one.
Gotcha. Yeah, so we talked a little bit about your technology. I'd love to hear a bit about Brex Cash too. I think a really interesting product for those who don't know. Maybe you can talk a little bit about it, and maybe if you've seen any interesting metrics or trends around adoption over the past couple months.
Yeah, Brex Cash has been our crown jewel over the last few months. We launched it, I think it was a little bit over a month ago. So anyone can sign up now. And it just, exploded. Like a lot of people were unsatisfied with Silicon Valley Bank and first, and other banks that uh, were doing. And I think with Brex Cash, you can just so easily sign up online. Making payments is so easy. Everything now is super simple. We just recently launched mobile check deposit, so easy to kind of deposit checks, send checks, also to now approve payments. So we've been building the product for a while now. I think we probably underestimated the amount of work when we decided to start. When we started to work on Brex Cash, we were probably like a year into Brex Card launch, which is not super normal for a startup to decide to build such a second complex product so early
Right.
in the life cycle. I think we probably underestimated the amount of work that was going to be. But now that we did the work, we're so happy because the experience of now Brex Cash plus Brex Card is so much superior to any of those products individually.
Right, and cash is a cash management account, and you have the credit card. So, in theory, you're becoming almost like a more full service sort of institution for young companies that are just getting up and running. Right.
Yeah, definitely. Most of our Brex Cash customers don't have a relationship with another bank.
Okay, gotcha. And do most of your customers are existing Brex customers, or are you seeing a lot of increased demand from people that are outside of the Brex ecosystem?
It's actually mostly new customers.
Interesting.
The best value proposition today is like if we're your first account, it's easy to
Mhm.
sign up, you don't have any fees, you don't have to move anything. We definitely seen a lot of people moving and very happy that they're moving, but the I think the large majority are new customers actually.
And when I actually remember, I actually spoke to Zach for an article when you guys announced it a while back, and yeah, I'm super curious to hear a little bit about how you thought about the Brex Cash launch. Like you said, doing a second product only a year into your first product is a little bit unorthodox. So what was like the reason that you wanted to provide a cash management account to your clients?
Yeah, so to be 100% honest, we actually, when we were starting Brex, we thought about building this product even before we built the card. But we're like,
Hmm.
who's gonna give their money to a thing they never heard of, called Brex from two Brazilian kids, like so.
Yeah.
We're like, okay, this is not gonna work for now. Maybe it's our second product. And I think that we started having like even the thing that we weren't vertically integrated was that when you sign up for Brex, you need to log in with your bank account, and we use that to monitor. And our worst customer experience, if you look at all our NPS, the worst thing people dislike about Brex is that their bank connection keeps breaking
Mm.
from time to time, and that's not really our fault. Is like there's not a lot of vendors that do. So we have both now Plaid and Finicity as vendors, and it's not their fault either. Like it's really hard to run those businesses.
A lot of fintech companies suffer from the breakage problem when like of the connections, right?
Yeah, exactly. So but that was the biggest thing, and we didn't have much to do. We couldn't do anything about it. And then we're like, well, how do we actually solve this? Like, well, if most of our customers use our own account, then we don't have this problem.
Right.
So that's kind of what accelerated the project, was kind of like a longer term solution to bank breakage.
Yeah, it's like first principles going to the underlying issue of like, the fact that like they don't have a bank account that is, really technology forward, right?
Exactly. So it's a product we already wanted to build, and I think that kind of accelerated, the development of it. And now, we're seeing so many cool things that we're going to launch over the next quarter that will only be possible because we own Brex Cash.
if you wanna tell us a little bit, give us a little hint, feel free.
I won't give you any hints, but we'll do another one of these after we launch
That
because
sounds
there's a
good.
lot of cool stuff coming.
That sounds good. Great to be. I'm super excited to hear more. Let's talk about the Brex business, in and of itself. You mentioned, being more well capitalized to better serve your customers. Obviously, businesses are thinking a lot more about fiscal responsibility and managing finances. Managing finances for a high growth business, in a downturn economy sounds very complex. Would love to hear a little bit about how you're kind of thinking about that. Uh, kind of COVID kind of has taken hold, and just in general about your thoughts on managing the finances of a business in like right now, if that makes sense.
So I think that we were always very paranoid with finance. So our CFO joined maybe 2 months after we started Brex. It was
Mhm.
like our first hire, and as a company, we were audited by a big four audit firm from the first year that we started the company, and by choice. It wasn't anyone was like
Yeah,
forcing us to
yeah.
do it.
Uh-huh.
It was just by choice. We thought that um, going through an audit early on forces you to adapt the best practices in accounting and finance to control. And the reality of was because in our last company, when we started the company, we really didn't know even what accounting was. Just some way investor said, "Hey, you need a balance sheet and a P&L," and I was like, "What's that?" And we just had to go and scramble ourselves to kind of like learn a lot about it and do it.
Yeah.
And then we also had problems with our system in the previous company in which like there's some money we didn't know who it was, just because of glitches in the system that happen over time. And
Mhm.
I think when we started Brex, we were just so paranoid to not have that happen again. That the first internal ledger that we built for Brex was already like so complex. One of our investors said that it was even more complex than his fintech company that was operating for a while. Um, and then we went through this kind of like big four audit. We were like 6 people,
Mhm.
and adopting the best practice in the beginning. So it's something we're actually quite paranoid about is kind of
Mhm.
financial reporting and kind of like financial controls in Brex.
Mhm. So, as COVID, I mean, obviously Brex is super well known for the offline marketing and things like that. How have you been kind of thinking about marketing spend as COVID has kind of gone on?
Yeah, so for us, we reduced a lot. I think that in our business, right, like growing through times of crisis, sometimes is the smart move, sometimes it isn't.
Mhm.
For us, we're focusing more on supporting our existing customers than we are on trying to acquire a lot of new customers. But it turns out there was a lot of new customers just signing up because of
Yeah.
them needing Brex. So we didn't actually need to do a lot of marketing to hit our kind of like financial targets.
Right. So it ended up being you could pull back marketing, but still, grow efficiently enough without having to worry about, spending a lot of money. Right.
Yeah, exactly.
Yeah. So we're coming up. We have a couple more minutes left. Would love to talk about, just COVID overall, right? The financial, I think the opportunity for fintechs in general. Traditional banks have not really been as helpful to small businesses and startups as companies would have liked. And I think a lot of people have been kind of thinking it's a big opportunity for fintech companies. Would love to kind of hear your perspective on this, like just from like a 10,000 view perspective. What do you kind of think are the opportunities? Do you think there are opportunities in fintech, and what do you kind of think is something that has popped up over the last couple of months that you think is might be ripe for innovation?
Yeah, so I think that there's a few things, right? So the first one is I always like to say this. There's like, and I don't know if the stat is true post COVID, but it was definitely true before. Which there were 44 banks in the United States that were over $10 billion in market cap. So
Mhm.
think about it: 44 companies that kind of do the same thing, right? They're all banks,
Yeah.
and they're over $10 billion, right? Versus we have like 6 social media companies. We're like three, like it's not a lot of sectors in which you have that much. The market is that big and like not consolidated. And the
Hmm.
reason for like, let's say you take out the top 10 banks, the next 34, the reason they're over $10 billion is like one single thing, which is it's regional, right? Like they have branches close to people's houses. And I think with COVID, everyone is kind of realizing that that's not necessary anymore. Like I don't really care about having a branch next to my house that much, right?
Exactly.
Businesses are going more and more online instead of offline, right? People don't want to touch cash anymore, like maybe
Hmm.
COVID and cash,
Yeah.
So I think a lot of the advantages that these kind of, let's say, the big banks will always be fine, but these like middle banks are going to have a really tough time, in my opinion, because you know being geographically close to the customer is decreasing in importance.
Yeah. I mean, what about things like, things like finding new creative ways to do underwriting, finding alternative data sources. I mean, I think that's something that you guys have focused a lot on at Brex, right?
Yeah, totally.
So would love to hear a little bit more about, I think it's still somewhat rare, I think, especially on the like the sort of fintech side of fintechs that service businesses. So would love to kind of hear a little bit more about how you guys are thinking about, amplifying that over the next couple of
Yeah,
in the future.
so that's a really hard problem for fintechs, and I'll explain why. I got
Mhm.
this advice early on from an investor, is like when you're in the lending business, a lot of times the way people do it is like they don't try to create the best underwriting model. They try to create the best underwriting model that banks are willing to buy.
Mhm.
Because in the end of the day, in order for you to grow, you need the capital, and someone needs to give the capital. And the banks, they're not allowed to give you capital with like really crazy underwriting models.
Right.
Um, so the thing we were lucky in Brex is that since in the beginning of the company, we used a lot of equity just to finance stuff. We raised large rounds and our receivables were really short, so we could get a round of equity for a long time to create history, to make banks comfortable, and then we were able to get warehouse lines, that to finance our kind of like alternative underwriting model. But even our alternative underwriting model was quite simple. It was like cash based, so it wasn't very hard for people to kind of grasp. And only
Right.
e-commerce that we were doing something that was like different and risky. Turned
Mhm.
out it worked out, but it could have not. And now I think we have a lot more credibility and flexibility to try and experiment with new underwriting models. But it took getting to our scale to be able to do that, because before we kind of needed to either use equity or think of like what the banks would be willing to buy and purchase. Um, we're going to keep this exploration, right? We're going to keep improving our underwriting model, using alternative data sources, trying to avoid as much as we can personal guarantees and FICO-based stuff. Um, Even though, we might do that at some point, just because of, the sometimes you don't have alternative data because the company just started, so there's no data.
Right.
Uh, but I think that it is in our DNA to keep pursuing this, but we totally acknowledge that it's really hard for new companies to do this because the banks just won't finance these alternative lending models. It's too risky for them. The regulators will get upset, and
I was gonna say, yeah, I've been talking to a lot of regulators about unique like different underwriting models, and it seems like there's a letter at the end of 2019 that was written by a bunch of the OCC and other like 12, a couple other regulators around cash flow underwriting. It seems like I'd love your perspective on it. It seems like regulators are becoming much more open around using technology to do better underwriting to serve underserved customers.
Yeah, I think that's a huge thing that needs to happen. But again, it goes back to the core banking system, right? If the core banking system doesn't support ingesting
Right.
these new types of data or like underwriting in a different way, it's really hard, right?
Yeah. So that in terms of opportunity, if the regulators do end up moving forward with like allowing creative underwriting models, like in theory, it could be a really good thing for you guys to kind of experiment a little bit more around
Totally,
finding ways. Yeah.
totally.
So yeah, a couple more minutes left. I always ask this question, but as an experienced entrepreneur, what advice do you have for people who are just thinking about getting started in fintech and thinking about starting their own business?
I think that, I think one of the things that I realized about fintech companies is lending is a good business, but lending on top of an existing product that is not lending is a better business, if that makes sense. So what I mean is, it's hard to start a lending business in which what you're selling is the money. It's easier to do
Mhm.
something, it's more successful to do something like, just pick Square, like you have Square and then you have Square Capital, on top of
Right.
like the existing product and and I think that's true. It's probably true for like every kind of lending is if you do it on top of some other product that you can get customers on, that's probably a better idea. So that's number one. And number two is building your own infrastructure. You don't need to start with it, but prioritizing that ASAP, in my opinion, will create a huge advantage in the future.
Yeah, that makes a lot of sense. I mean, you guys are a testament to that for sure. Well, Enrique, thank you so much for joining us today. I really enjoyed chatting with you and learning a little bit more about how Brex has been doing over the past couple months. Thanks again.
Thank you so much for having me.